Folks, today is Friday, the 28th of February. Tomorrow's the last day of the month, and the markets have been going haywire. But I've got a great update for you today, and there's upside at the end of this tunnel, all right? There's some light at the end of this tunnel, all right? So, folks, before I get started, I got something big for you today. I want to introduce to you someone. He's an ex-hedge fund trader. He specializes in making large amounts of money very, very quickly over a very short period of time. And this guy doesn't get out of bed unless he sees opportunities for 2 times, 3 times, and 4 times, even 10 times money on your risk. This guy's looking for big, explosive gains. If that interests you, big gains, short period of time, in and out, 24 hours in and out, in Monday, out Tuesday, in Tuesday, out Wednesday, in Wednesday, out Thursday. If that sort of trading interests you, and it should right now because the markets are volatile, it's time to take advantage of that type of trading. I highly recommend you follow the link below. The video, after this video wraps up, follow the link below, watch this video. It'll give you all the details on the strategy. Now let's get into the market. So, more downside, more global spillage from the coronavirus. German DAX skidded 5% before stabilizing. Tokyo and Shanghai closed 3.7% lower. Investors are getting nervous. It has become a full-blown case outage. It really has. I mean, this has been a real big deal. I mean, I wanted to just show you something here. Some days have said that, some analysts have said that this was overdue in record-setting bull market, and that's exactly what I've been trying to say. I believe that a lot of this was triggered by the coronavirus, but I don't believe that the cause of this downside is the coronavirus. I think the cause of this downside is this, something I've been pointing out for about a month now. We had the highest momentum levels in the S&P 500 in, let me see here. Let's see here. Since 2014. Look at this. Highest level in the last 5 years. We had 84% trading above the 200-day moving average. This happened on, when did this happen? Let's see here. This happened a month and a half ago. And I told you so. If you look at almost every one of my videos over the last month and a half, you will see me pointing this out. And it happened on the NASDAQ as well. Look at the NASDAQ. I want to show you this. This is insane. This is the NASDAQ 100. Stocks above the 200-day moving average. Happened here. Boom. Happened here. Boom. Now we have only 48% of stocks trading above the 200-day moving average. That means the market is seeing that balance. It's seeing that downside. I think the overall stock market, we're at 32%. The S&P, we're at 32%. And I think if you look at the overall stock market, let me show you the overall stock market. The overall stock market, only 31% of stocks are trading above the 200-day moving average. So we are in a official bearish market mode. The question is, will we stay there or will we bounce? Well, put the call ratio, again, barely went up, but it's at 131. It's telling us that it's going to be very, very hard to generate downside pressure from these levels. This is a stretched out market to the downside. Volatilities right now, this is the highest level we've seen since 2011-ish. All right, so we're getting up there. We're really, really getting up there. And again, market is cooling off before the opening bell, but I think we're going to capitulate in the next few sessions. I don't think this downside is going to continue shaking us out. I think the worst is behind us. I really, really do, because of momentum levels. Again, momentum levels are not overbought anymore. These momentum levels are very, very important. And while we can go down some more, I believe we're getting closer to the bottom. Again, look at the NASDAQ 100. 84% above the 200-day moving average, now 48%. Big difference, right? Big difference. Now, looking at the chart, if we're looking at the daily chart, the NASDAQ 100 is still above the 200-day moving average. That's very, very positive. And that's telling us that the bulls are still trying to keep this market up. I'm not expecting the market to stay too much above the 200-day moving average. I wanted to see it go down, bounce, get stopped out around here. I want to see a lot of retail traders get shaken out, and then the market will usually pull back. If you look at the SPY, you will find that we are way below the 200-day moving average. Momentum levels are through the they're doing the opposite of what they were doing before. Let me show you this. Yeah, we're definitely deeply oversold right now. And there's going to be a really good opportunity for a bounce in the next few days. Expect a bounce. Whether we go to the twilight zone and not hit the 50-day moving average, which is likely, we are going to see a bounce. Also, I'm going to leave you on something very positive. According to Israel, this morning they said they're going to have a cure for the coronavirus within 3 weeks. If that's really the truth, if that's really the case, we may see some upside, really strong upside. Now, before I forget, follow the link below. This is really important. If you're an aggressive trader and you're looking to make triple-digit gains, but you don't want to deal with the current volatility, you want to be in and out. Lance's Blitz strategy is for you. I mean that. You're in and out in 24 hours. You're taking advantage of option activity that's signaling that stocks are going to explode. You're only looking at opportunities, double, triple, 8 times your money, 24 hours or less. It's perfect for the current market environment. You don't want to miss out. You want to get in on this now. Follow the link below. Lance will show you the way. Bye, folks. Have a great weekend.